What's going on, guys? In this video, I want to give you guys some of the tips that kind of helped me personally become a better NASDAQ futures scalper. So again, you can apply this to options, you can apply this to stocks, crypto, commodities. It really doesn't matter what asset class you're trading, whether you're Forex, pairs, it doesn't really matter. But one of the first things that really truly helped me become a better trader was actually understand my edge. Okay. So what is an edge? Your edge is your strategy. What are you looking for when you're coming into the markets? What are you looking for at the open? How long are you looking to trade? Because a lot of times, especially newer traders, and I really hate seeing this happen, is they have no idea what they're looking for. They understand a little piece of their strategy. They have back tested their strategy, but as soon as the market opens, they go blank. It's like a deer in headlights. If you have an edge, what are you looking for? Are you looking for some type of confirmation if XYZ confirms? Are you waiting for a previous day's price level to get taken out before you go long? What are you truly looking for in these markets? As soon as I personally started to understand, okay, this is what I'm looking for. When I get this to happen, I need to do XYZ. As soon as I understood where I should potentially be taking profits, right? Am I looking for a previous day high or a low to get taken, into consideration before I take those profits? Am I looking for a certain moving average? Am I looking for a specific, zone to get touched before I get out of the trade? What are you looking for, right? So have a good understanding of your edge. And again, the only way that you have a good understanding of your edge is that maybe you write it down, have a trading plan. Now, if you don't have a trading plan, you're going to set yourself up for failure. So that kind of leads me into the second thing. What's inside of your trading plan, right? What's your account size? Ask yourself this. What's your account size? How much can you afford to lose before you have to call it quits? How much is a realistic number based on the amount of contracts that you're playing is a good number to kind of stop trading on the day? That's going to lead me into number 3. Do you understand fully what your risk management, plan or rule is, right? So say, for example, you're trading the NASDAQ, you're trading the NAS 100, you're trading, the NQ. How many contracts can you truly play based on your account size? If you're trading for a prop firm, how much drawdown do you actually have before you get liquidated? And can you afford to play 5 mini contracts? Can you afford to play 10 micro contracts? Understanding is definitely going to help you in the long run. Understanding your edge, understanding what's inside your trading plan, understanding what your risk should be. So for example, let's just make a little mini plan here. Let's say we're trading the NASDAQ futures. Let's say we're on a prop firm account. Let's say, for example, we have a $2,000 drawdown risk. Well, automatically, I know that I can't sit there and trade 1-2 mini contracts. I need to be trading micros. Okay, so now let's get down into the psychology part of that. How much am I willing to lose per trade? Is it $100? Is it $150? Is it $200? If you're okay with losing $150, $200 a trade, now we can start to dive into how many contracts we should be playing. So once you get that out of the way, then you kind of look at each setup, right? Because every setup, you're going to have a little bit of a different stop loss. Again, I know there's people out there that say, well, I just set a 7-point limit order to stop me out of the trade if I go down 7 points. I'm going to tell you, you're going to lose more trades than you're going to win, because the NASDAQ is going to whip around 10, 15, 20 points at the blink of an eye. So again, your levels on the NASDAQ, your stop loss on the NASDAQ 100 needs to be at specific specific levels, right? Specific levels of supply and demand, specific levels of, a period of consolidation, something, right? It's going to be different. It's going to be based on each candlestick is going to be different. So let's say, for example, we have a 30-point candle stop loss, right? So let's say, between our stop loss and where we're taking entry, there's a 30-point kind of gap there. Well, the way you're going to break it down is if you were trading 1 micro contract, that'd be around a $60 loss. Are you okay with losing $60 on this one particular trade? If the answer is yes, you do the math for 2 contracts. Are you okay with losing $120? Okay, if the answer is yes, let's stop at 2 and let's ask ourselves, if we take 2 losing trades, we're going to be down around $250 on the day. What is our daily stop loss? Now, again, if you're trading for a prop firm, yeah, maybe sometimes they give you $1,000 drawdown in a day. Maybe you have a trailing drawdown of like 2,000 or 2,500. That's not how much you should be losing. That's how much you need to lose before they start wiping you out and kicking you off, right? Think about it like this. If you were reporting to the office and you had a real job and they told you, if you lose more than $2,000, you're fired. How much risk would you actually put on the table? Would you be putting on 10 lot size? Would you be putting on 15 lots? Would you be putting on 5 lots? Think about it in that sense. Think about if at the end of the week you had to come home to your family, to your kids, to your wife, to your husband, and tell them, hey baby, hey honey, I just got fired because, you know, I didn't follow my rules, right? I didn't follow my rules. How would you feel if you couldn't feed your wife, your kids, your family, your parents, your grandma, whoever you live with, yourself for that matter? How would you feel if you couldn't eat because you're, you know, shooting for the stars, right? So think about it in that way. That's going to put a little bit of a clear perspective. That's also helped me become a better scalper. Another thing that's helped me become a better scalper is understanding where I should stop on a day. Because I have a feeling that you personally have been green, right? You have been green, and then you've taken another trade because you feel like, well, this is a good setup. I'm already up $200 on the day. I could potentially be up $400. And then that's the losing trade. That's the trade that wipes you out. That's the trade that triggers this emotional response to start revenge trading because you're thinking to yourself, I was up 200. This trade looked great. I took it. I lost on it. Now I'm break even. If I need to just get back to where I was before. And that leads you down a rabbit hole where you take a losing trade after losing trade after losing trade, and it tends to mess with you. That's one thing that I'm really working with people in the Evolution Traders mentorship is getting down that position size based on your account size, allowing the trades to kind of work out to full potential or technical damage stop out. So that's going to lead me to the last thing in this video, right? That helped me really become a better trader. And that's actually allowing the trades to work out in my favor and taking profits at a technical level where I should be taking profits. What does that mean? That means that what's the next supply zone? What's the next future area of resistance where this potentially could pull back if I'm going long? That's where I want to take profits into. Start working on that. That doesn't mean get into the trade, let it go up for 30 seconds, sell out of it, and then chase it 5 minutes later because it's still going in your favor. No, if you get into the trade, what's that price target? I'm not saying it has to hit it to the penny, but at least let's try to take that trade as close as we can to that potential price target. Let me give you guys a little bit of an example here. Notice this play that closes over the 20 SMA here at 6:45 Pacific Standard Time. Well, if my potential take profit is at this 200, which could be an area of resistance, I want to take profits into this area. I don't want to sell on this first candlestick just because we spike up immediately. I want to see how close can I get profits into that 200 SMA. Right? Whether you want to re-enter on this trade, you're going to have to wait for a new setup. So allowing your trades to work out into your price target or stop you out at technical damage. Now notice this trade here, this candlestick from 604 all the way down to 520, you're talking about a 40 to 50 point candle. There's no chance that we're going to give ourselves 40 to 50 points. Again, it's all depending on your risk management, right? Maybe if you're going to play one micro contract and you're going to be okay with losing potentially $100, $120 on one micro contract, then yes, that's okay. But if you want to take 3, 4, 5 contracts and this potentially stalls out and comes back against you, you don't want to be down $300, $400, $500 off the start of the bell, right? So again, your position sizing is all dependent on what your risk management is going to be, right? What's your overall max pain? That's going to depend. That's going to determine how many contracts that we're allowed to play. So again, have a trading plan, right? What is in that trading plan? How much are you willing to walk away with? If you're up $100, is that something you're comfortable with? Maybe you set a rule in there for you're only going to trade the first 2 hours of the market. Follow that rule. Let's say you make over $250, the whole computer screen goes off and you go do something else, right? Again, if you take 3 losing trades and everything was according to your edge, your strategy, and they failed, stop trading on the day, right? So you have to have some concrete rules in that trading plan that you absolutely need to follow. Again, letting the trades work out to full maturity, meaning into the next area of take profit, or technical damage when that trade is technically no longer worth being in the trade. These are all things that are going to help you become a more profitable scalper when it comes to trading these futures. So again, maybe you guys need a little bit of help, right? Maybe you're not understanding position sizing. Maybe you're having trouble with confidence. Maybe you personally are having trouble being able to stop on the day that, you feel like you go up and then you give it all back and you put yourself in the same situation. Maybe that's you. Maybe you personally are having that problem. Maybe you're bored, right? Maybe you're just bored and you have nothing to do. It's your day off, or, you don't have school, and you're kind of sitting there and you're just taking trades because you're looking at people on social media post up gains. Boredom trades are what wrecks people's accounts. You made a little bit of money, maybe you lost a little bit of money, and 3 hours later, you're still looking at the charts, waiting to take a trade just because of the sole fact you have nothing else to do. These are all things that I focus on helping traders get over and overcome so they can be more confident, so they can trust technical analysis, so they can become profitable. If you guys want to work with me in the private mentorship, you're going to get access to my courses going over all my strategies. You're going to get access to my daily watch list. You're going to get access to communicate with me through phone calls, through Discord, however you would want to. We can set up one-on-one coaching calls, 30-minute sessions at a time. We can do all of that stuff. We can recap your trades. We can go over mindset. We can do all kinds of stuff. If you guys want access to that, that link is going to be down in the description box below. I'll catch all of you guys on the inside when you guys decide to change your trading for the better. I'll catch you guys all next time.